Hi, Yasser. Hey, Centra. How you doing? I'm fair. Eduardo, how are you? Richard. All right, it's 4:30. I'll give it about another 30 seconds. Let everybody kind of get settled and welcome. I'll just give this a few more seconds. We've got closing in on 150 participants, so that's fantastic. Hey, Odeon. Thank you, Scott, AJ. All right, why don't we kind of get cracking? So, welcome to this free live webinar series, a 4-day trade execution webinar series that I've kind of subtitled "How to Capitalize on Monster Moves in the Markets and Avoid the Market Traps." My name is Mark Shawson, the Pattern Trader, and probably the latter part of this is more important than ever. The markets are, hugely volatile, seemingly very chaotic. And maybe, after you spend some time with me, I'll show you how I kind of parse it, how I kind of look beyond all the noise and look for trades that meet my risk reward criteria. But, before I go on, just want to briefly introduce myself to those who, have never met me before. I started my trading career more eons, more decades than I care to acknowledge or remember. As my dad says, I've written books on the markets, and then he says checkbooks. So I've made all of the mistakes. I started my career, I started trading about 18, 19, 20 years old. I was going to one of the finest business schools in the United States, in Los Angeles, USC, University of Southern California. It's a private business school. And while I was going to business school, I was being taught on how to evaluate investments from what we call a fundamental standpoint. So fundamentals are where you dig into, if you're looking at the economy, you look at GDP, you'd look at inflation metrics, you'd look at, all kinds of, metrics to understand where the economy is going. If you're looking at a company, you'd look at a price earnings ratio or a sales to inventory, or, what the quality of the management are. And these are what are called fundamental metrics. But while I was, absorbing all of that great information in college, at the same time, I met this very interesting guy named Graham Loving. So this was at a time where my father was trying to raise some money for a drive-through animal park. It's called Lion Country Safari. In fact, we have one just north of me where I live in Florida right now, and it's still there. But my dad was doing this, many decades ago, and he called on Graham, who was an investment banker at the time. So Graham was, by day, an investment banker, but by night he was trading the commodity futures markets. Now, this was a time where it's really resonant of the times we have today. We have an explosion in oil prices, explosion in gold, rampant inflation. This was in a period that probably many of you don't know or don't even remember. It was in the late 1970s. And Graham was trading about 25 different markets at the same time. I mean, markets like cocoa, orange juice, soybean meal, live hogs, pork bellies, US Treasury bonds, orange juice, all kinds of disparate markets. So what really intrigued me was not, only how, Graham was making all this money, but, the way he was able to do it. So right around that time, Graham and my dad kind of got together and put together some money for a trading account. My dad put in $50,000 and Graham put in $450,000. And I'm saying this was like 1978, 1979 timeframe. So they started out with $500,000. And by the end of the year, Graham ran that account to $5 million. So, that was real money in 1970s. And, so I was just blown away. Here I was, trying to decide what I'm going to do as a career. And when I saw, Graham kind of create all this magic in the market, I was kind of hooked. And so again, it wasn't how, Graham was how much money he was making, but the way he was doing it, which was completely contrary or opposite to what I was being taught in school. Graham was only observing the price action. So every day, and this was before the internet, before fancy charting services. So Graham would, get a piece of graph paper with all these squares on it, and he'd draw an X and Y axis for price and time. And that's all he did. So every day he would just like plot the closing prices of live hogs or soybeans or corn or wheat or, the dozens of commodities that he was following. And over just like a couple of week period, Graham could see either lines going up or the line was going down. And, Graham would say to me, Mark, I just want to buy a market that's going up or sell a market that's going down. And to my simple mind, that elegance, that simplicity really intrigued me. And so I was hooked on what we call technical analysis. Technical analysis is purely the analysis of price action alone. You're not looking at the news. You're not looking at fundamental information. You're not, understanding what the Fed's doing or where interest rates are going or what the inflation is going to be next year. You're seeing what the markets are telling you. And so to my mind, what I've understood over time in trading these markets for decades is that the markets are ahead of events. So the Fed started raising rates 2 months ago. But these markets, the NASDAQ and the S&P and whatever, started topping last November. So the markets are ahead of the information. The markets are discounting. And so what I did after I met Graham was I just built this mousetrap, built on years and years of making all kinds of mistakes, figuring out how to put together a plan that I could be consistently profitable. And, I've been very, very successful for many years now through all kinds of market periods, up, down, sideways, Fed, no Fed, it doesn't matter to me. I just look at the market purely as an energy. Either the energy is moving up or the energy is moving down. And I look to capitalize on that energy. So what I'm going to do is, go through the markets, go through some live markets in real time, show you what I'm thinking, what I'm doing, and hopefully over the next 4 days together, you'll start, understanding how kind of all this comes together. So with that, I'm just going to share with you kind of what I do in the markets. I like to be very transparent. So these are my positions that I'm going overnight with. So I'm short. The triple Qs are an ETF that basically it's the NASDAQ. It's, the triple Qs are an ETF that mirrors the NASDAQ. And I have these put options, and a put option is a leveraged bet that the market's going to go lower. And then I also bought put options in the S&P 500. And I put about 60 grand into these put options, and they expire at the end of this week. You can see 5/18. Well, this one actually expires in 2 days on Wednesday, and this one expires at the end of the week. So this is a very levered bet for something to happen in a very quick period of time. And I think the market's going down, and I'll share with you why. Then I'm also short the stock of Moderna and the stock of Novavax. And you can see that I am short in this account the stock of Moderna, and I'm also long the calls of the SPXU. Now, this is an inverse instrument. This is actually, if this goes up, it means the S&P is going down. So this is just another way of me betting on the S&P going down. So I bought the calls on something that goes in the opposite direction. It's called an inverse ETF. And then I've got some outstanding positions in gold and the pound versus New Zealand dollar, and I'm up a nice chunk of change in those positions. So I look to hold positions if they're working for me. And this is in contrast to what many of you guys are doing, where you're trying to go in and out several times a day using what we call indicators to, grab 7 pips here or 15 pips there or what have you. I look to take the middle out of a big move of the market. And so I started putting on gold trades in late April. So this is an email that went out to our members, and this is an email that goes out. If you're interested in getting these emails, then we'll discuss it at the end of the 4-day thing. This is a free webinar. I'm not going to try and sell you on anything, so don't be on guard that I'm going to try and hit you over the head with something. Whether you choose to go forward with me or not is entirely up to you. So on April 25th, I sent out this email showing the chart patterns that I believe were bear price patterns in gold. And I said, put a sell stop in gold at $1,919. And right now we're trading about $100 less than that. And I said, we have a double top bear price pattern. I said below, penetration below the inside weak bar will very likely be a catalyst for lower prices. Then just a few days ago, I said sell gold at a limit of $1,827. And I am very bearish gold, long term. Today we had a big up move, but I think that the bigger moves are still down, and I'll share with you why. And so these are my outstanding gold positions right now. Now these are open positions, so they could go more profitable or they could, lose everything, depending on what the market does. So these are live trades right now. This was a trade set up in the dollar versus the yen, where I sent out an email to our members on March 13th saying just buy the dollar yen anywhere you can around 117.30. And dollar yen went to 130 after that. It went up 1,300 pips after this email went out. I said, it's broken out of a long-term symmetrical triangle, blah, blah, blah. I said I would look to get a foothold in this pair, staying with this trade over the long term. And it was the same thing with the euro yen. Just a few days later, I said, buy the euro yen because this thing looks like it's going to explode through this pattern, and made a hefty chunk of change betting on those yen trades. So very once in a while, I'll look for these special trades where I literally just load up the truck, because the market, in my mind, has de-risked itself. If the pattern becomes more and more mature, at some point when it breaks out, then you kind of really know you got the tiger by the tail. And it's these events that I look for. So I trade in and out every day, but I load up the truck, once in a while, where I see a very special opportunity. So this was in the pound New Zealand dollar. I told our members to buy to 192.77 on, this was a while ago, I guess. Time goes by so fast. And then I said, currently long 192. It was now trading at 199, 700 pips higher. And you can see that I hold for big trades. So I was long at from 192, and this was trading at 199. So even though it was up 700 pips, I wasn't looking to take profits. I was looking to add to my trade. And then it broke through here, and I made, just bozo bucks on that trade. And then these are other trades in the stock market. This was in QuantumScape, where, I said, get short at $40, and now the stock's trading around 10. And this is what it looked like. And, these are kind of the outcomes. This was in a stock called Lyft. I think what I'm going to share with you is just some emails that I sent out. So this is evidence of how the market is a discounting mechanism. So this was an email that I sent out in August of last year. So what is that? 8 months ago, what have you? I can't even do the math anymore. And this was in BYND, Beyond Meat. And I said beyond slam dunk, because I thought at this point, because of the patterns and the price action, this was just a no-brainer. And I sent out an email to our members to sell it at roughly $120. And last week, this stock hit $19. So literally crashed $100 from this point in last August. And I've been saying from the 200 price level that Beyond Meat was going to be a $30 stock. And last week it went to $19. So if you've known me for any length of time, you can go and check out my YouTube videos. I've been kind of saying, Zoom, Peloton. This was an email that was sent out last March, so over a year ago. And I said, even though the NASDAQ went and made new highs in November, I said at that time, the NASDAQ is trading near quicksand levels. So it looked to me like things were just going to plummet and, keep plummeting. And that was all the way back last year. So, I said last week, the S&P and Dow Jones closed very close to their highs. On the other hand, the NASDAQ's trading about 7% lower than its all-time high. This reflects an ongoing rotation out of growth and into value stocks. And that was over a year ago, and that trend has just accelerated. I said, there's been a lot of carnage that has already occurred, 30 to 50%. Now it's more like 70 to 90% in stocks like Tesla, which topped out at 1,200, it's now 700. Snow, which topped out at 400, is now 140. Zoom, that went from 500, is now 90. QuantumScape, that was 140, it's now 10. Peloton, that was 170, it's now 15. Dash, Lemonade, Coop. So all of these stocks, I was telling our members to short from over a year ago. And those stocks have just continue to plummet. So it doesn't matter what the Fed's doing and whatever the markets tell you what it looks like. I'm just trying to. So these are just, just for giggles, I just kind of pulled these up. And last May, I said the NASDAQ's on a bicycle poised to go over a cliff. Now, that was a metaphor for Peloton, which was then trading about 120. And last week, it went to about $10. And again, last May, I said, I used the bicycle metaphor in my heading because Peloton, the exercise bike company, and many other second-tier stocks such as Zoom, Beyond Meat, QuantumScape, Jumia Technologies, FCell Plug, have gotten crushed and are now poised to go much lower. So I have been beating this like a pommel horse for over a year. So sorry, I'm just trying to pull up these historic emails. So to my mind, this just supports that the market is a discounting mechanism. And I just look to get in and surrender to the will of the market. And this, particular thing, I was buying Lyft at 45 bucks. I was buying the call options, the $46 and the $47 call options. And 3 days later, this thing was trading at $53 and I made over $280,000 in a combination of the stock. I bought the call options at 46. A call option is a bet on something going higher. So in this case, I bought the call options for 92 cents and blew out of them a week later for $7. So, about a 760% return. So sometimes if I think that a market is going to move very, very quickly, I'll buy, a put or a call option. So you can see this was a call option in JD where I bought these options at $1.25. And a few days later, I blew out, 3-4 times higher. So this is kind of what I do. And now I'll kind of show you why, I come to certain conclusions. So today I went home short Moderna. This is the vaccine company. We've all heard about it. It's done special things. But again, I just look at, what the price action is telling me. So, I'm often asked the question, do I look at the news? And the short answer is no. But I do feel, so I primarily rely on technicals, but I do feel like the fundamentals and the technicals are coinciding right now. So there's a whole debate, what is the Fed going to do? What are interest rates going to do? What's inflation going to do? Is the US going to go into a recession? And my belief is that the US is going to go into recession. And I think it's going to be a lot deeper and harder than most people think. And I think that just because of what the markets are telling me, and I don't want to get into a whole political thing, but I think this has kind of been a combination of the worst economic policies and Federal Reserve monetary policies that I've seen in my lifetime, where they misjudged inflation, where this administration overstimulated demand. And, it's just simple math, right? So in 2018, we had a deficit of $20 trillion in the United States. Now it's 2022 and we have a deficit of 30 trillion. So that's a 50% increase in our debt, but our economy hasn't grown that much. So to me, it's just simple basics. We've really pulled from the future. We pulled forward, we pulled from the future, and now we got to pay it back. And we're going to pay it back with a vengeance. And so here we are. But again, I'm not looking at all, because even if you have an economic outlook, actually that could hurt you. If you hold any kind of view, then you can't really trade based on that. The markets are all over the place. You've got to trade based on risk and reward. But that being said, so this is Moderna. So when I look at a chart, any chart, it has to kind of speak to me. It has to say something. So when I look at a chart, I look at, okay, what is this thing doing? Are we in an uptrend or are we in a downtrend? And I always pretend like I have a 6-year-old sitting next to me. And if I ask that little 6-year-old, are prices going up or are prices going down? A 6-year-old should be able to say, well, it's gone from 500 and it's trading at 130. So this is in a downtrend. So once I kind of look at what the trend is, then I look for a pattern, and then I look for a set of price action that gets me in the trend and also tells me where my risk is. So I have like a 4-step plan to tell me how to manage a trade. Again, the first thing is what is the phase or the condition? Sorry, my writing is bad. The phase of the market. Well, in this case, this is a down market. Is there a chart pattern that tells me where this is likely to go? Well, this is a huge double top. Now, I put a link when we first started the webinar. You might be able to just pick it up. It's a strategy, and it talks about the chart patterns I look at and how to use them. So, I'd say check that out when we're done. So what a double top is basically it looks just like the letter M. And this is a reversal price pattern. So what this tells me is that leading up into this pattern, the market's going lower. And if this is a reversal price pattern, then it tells me that prices are going to go lower. So now once I understand, what the trend is, the phase, the condition of the market, and I see a set of price patterns, here's kind of a rounding top, that point me in the direction, then I look for a specific day, or in this case, it's a weekly chart, or a specific week where I look for what I call my insurance bar. Now, if it's on the weekly, it's an insurance week bar. If it's on the daily, insurance day bar. And what is, how do I define an insurance day bar? The first is what we call a key reversal. I've got so much, maybe you can't see it now, but this went to an all-time high at $500. And by the end of the week, it closed at under $375. So the beginning of that week, it went and made an all-time new high. But by the end of the week, it closed on the low of the week. So the seller, despite the fact that it made an all-time new high, the sellers were in control by the end of the week. Now, those key reversals, to my mind, point in the direction that a market's going to go. Now, you can't just take a reversal in a vacuum. It's got to be in combination with a pattern or a trend. There are two more, and I'll when I take away all this stuff, I'll show you again. There were two reversals right there. And so when I see the reversals within the context of a pattern, then I know, how to get in sync with that. The other insurance day bar is what I call an inside bar. And when we look at the daily of this chart, you'll see that today was what I call an inside day bar. And then I layer it all with an execution plan that says put a buy stop in a market that you want to buy below above the high of the reversal bar or the inside bar, or in the case of a trade where you want to go short, a sell stop below the low of that reversal bar. And so this is roughly it. I have a book, and I'll share that with you, a couple of days from now, that kind of goes into this in more detail. But that's really it. It's a 4-step layered plan that gets you closer and closer to the bullseye of a high quality trade setup. Let me just get out of this thing and then I'll start over again. So I'm not looking to win on every trade. What I am looking to do is take a piece out of the middle of big trades. When the market goes from 250 to 130, I want to just take a piece out of that trade. When in this case, the market breaks out here and it goes from whatever, 175 to 500, I just want to take a piece of the middle out of that. And so if you can do that just a few times a year, and I don't mean every day, you don't need to do it every day. This is how you can make a lot of money in the markets. What I don't think you can do is win by going in and out of the market 10 times a day, trying to get $1 here or $3 there before the broker hammers you. That's just not going to work. And that's not my opinion. If you look at, especially in the Forex industry, 90% of people are losing their money in the first 3 months of opening an account. And I think the big reason is that they're too short term and their outcomes are not big enough. And what do I mean by an outcome? So if you're in and out of the markets, on an FX trade, you're looking for 10 pips or 15 pips on a trade, you have to risk 10 or 15 pips. So that means you have a 1-to-1 risk reward relationship. Whatever you risk, or whatever your outcome is, you also have to risk that. Now you also have to pay the broker. So you have to add that to the spread. And so you have to, be successful 90% of the time doing this 5 times a day, every day, over time. And, do you think you can do this? The answer is no. And the statistics prove it. So certainly in terms of a Forex trade, I don't enter an FX trade unless I can see my way to at least 150 pips. Now, I have people on my review website who say, I've never made 100 pips on a trade. I don't even enter a trade unless I can see a path to making 150 pips. And so if I'm going to risk 50 pips to make that 150, now I have a 3-to-1 risk reward ratio. That means my outcome is 3 times my loss. So even if I lose this time, the next time if I win this, I can have 3 losing trades for every winner and still I can lose 72% of my trades. So now I don't have to have the pressure of, winning 80, 90% of my trades if my outcome is big enough. So when I look to short a stock, I'm looking to make at least 3 times my risk. So if I'm going to risk, $5, then I'm looking for a $15 move. And every once in a while, you can snag a couple of $100 move. And that's what I'm looking for. A couple times a year where you get these extraordinary, breathtaking moves. So, I see, I'm kind of just staring at my screen. Excuse me. Maybe I should just redefine what my objective of these, few days together. So this is a free webinar. And what I'm trying to do is show you how I evaluate a trade just using price action. And you can apply this to any trade. It can be in crude oil, natural gas, the euro versus the yen, gold. It's the same principles. So what I'm trying to do is show you how I extrapolate my method on a chart. But what I'm not going to do is start going down and looking at hundreds and hundreds of charts. That's not what we're here for. I'm just trying to show you how, I do it. And if you want me to analyze a whole bunch of charts, I have a Friday session called the Underground Trading Sessions, and that's where, I take requests. So respectfully, I'm not a DJ. I'm not going to take requests. I'm really going to try and show you how I make trades in the markets based on price action. So this is, again, we're back to Moderna. And so when I look at Moderna from a global level, a high level, and again, this is a weekly chart, which means that each one of these bars is 1 week in time. So a lot of you are looking at 15-minute chart, 4-hour charts, or what have you. To my mind, if you don't know the cards you're holding, then it's very difficult to be a winner, right? So it's like being at a poker table, right? The old saying, if you don't know who the sucker is you. And so if you're looking at a 15-minute chart, by definition, you've got maybe 5-6 days of history. This is giving me history back to, 2019. So I can see at a bird's eye view what's going on here. And to my mind, very simplistically, what I see globally is this very big double top price pattern where you go to a high, you back off that high, you try and reestablish that high, and you come back, and now you have this M top. Now, doesn't matter that one high is lower than the other. The right, could be higher than the left. It doesn't matter. I think we can all agree that when we look back at this thing, this looks like just one big giant M top, the letter M. And that is a reversal. So this is what I call my governing or dictating price pattern. So no matter what this does here, I am referencing that this is effectively in a long-term bear market. So every time this thing rallies, I'm just going to short it. Now, I shouldn't say that simplistically. I'll wait for a certain bar, I'll wait for a certain indicator. But this basically tells me that the game is over and this thing on balance is going to keep going lower. So it's like a cheat sheet for dummies. It's kind of knowing what's going to happen. And I could be looking at a chart pattern going back 3 months or 3 years to make a decision in a present time frame. And so once I kind of understand that this is going to go lower, then I just look for price action that confirms what I'm looking at. So right here we had, this insurance bar, what I call this key reversal, where it made a new high and it closed on the low. And so I'm just going to, surmise that we're very unlikely to take out this price, 155. I think it's, going to go lower now or in the near term. I took a bet today that we're going to keep going lower, and I'll show you why on the daily chart. So in addition to this double top, to my mind, this whole thing is like a head and shoulders. Now, it's extremely similar to a pattern that I told my members about. And that stock recently just dropped 60% overnight. So this is also, to my mind, looks like a head and shoulders. And a head and shoulders price pattern is what it sounds like. It looks like a man or woman's left shoulder. That's the left shoulder. The peak is the head. And this is the right shoulder. Now, this is an extremely bearish price pattern. This is what we call a distribution. This just indicates that throughout all of this period, people are effectively getting out. The insiders are dumping out. And that when something goes through the neckline, that's when it effectively confirms, and then it can just release this way. Now I'm going to show you a chart pattern that looks exactly like this. And you can see this is like going to be previews of coming attractions. And this is why I love looking at patterns, because it's like looking at history. We can understand history. We can understand where we might be going. So you can see we're sitting right on this neckline right now. We bumped off of it last week. And if we bump through here again, it's very likely to start going through here. So before I go to the daily, I'll show you another chart that looks exactly like this, and you can see the price action that occurred following the same kind of analysis. So I made a fortune betting on the downside of the stock called Upstart. Ticker symbol is UPST. Frankly, I don't care what the ticker symbol is. This could be the Man on the Moon Incorporated. I'm just looking at a pattern. And to me, the pattern equals trajectory. So what the pattern says, the trajectory should follow. So this here, again, looks just like Moderna, where you had this kind of, had this head and shoulders up here. But this whole thing looks like Moderna. We have the head, the left shoulder, the right shoulder. And I was telling our members just a few days ago that when it cracks through here, it's gone. So you can see there was an earnings release. The stock was trading $95 that day, and it went down to $30 overnight. And so this, I think, is the previews of coming attractions for Moderna. This, this looks a lot like the chart of Moderna to me. So again, what I'm trying to show you is just how a picture really speaks 1,000 words, and how this is all I trade off. I look at patterns, and then I look for my reversals. So made a new high and close on the low, made a new high, close on the low, made a new high, close on the low. And so those indicate A, where to join the trade, and B, where the risk is. So, at this juncture, I was betting that you wouldn't see that high, then you wouldn't see that high, and then you wouldn't see that high. Just like I don't think you'll see 150 in Moderna. So coming back to the daily chart of Moderna, this is why I went short today, because it had what I call an inside day bar. And I just, I usually say you should confirm it. You should wait till the next day and let the market, because tomorrow this thing could open and go back up. And it's usually better to observe these things and then put a sell stop just under the low here and let the market put you in. But I kind of jumped the gun and I got short. And we'll see what happens. So to me, Moderna is going to go down. I don't know when, I don't know what time frame. But if we look, here's the double top, and then here was really another kind of cup and handle, if you will, an inverted cup and handle, and it cranked through this neckline right here. And so you can see we broke out, retested this neckline, broke back, and now I think we're just going to keep dribbling lower. So, short, medium, long term, Moderna is going to go down. My view is if, keeps going up, I'm just going to short more. So this is what I call an inside day bar, where literally the range of today from high to low sits within the range of the previous day. And really, so what this says to me is that we made a little bottom right around, this low here. So that was a support area. We rallied for 2 days. But what this says to me is that today we couldn't make any progress to the upside. We couldn't rally. So this is what I call like a coiling of energy, a building of energy. And I'm surmising that the energy is going to uncork to the downside by virtue of all of the collective bear patterns in the stock. Now, I could be a little off in my timing. This is, very kind of, these, markets sometimes get into pretty random phases. This could go up or down and what have you. But, my mind is that I just want to build a position, because at some point, I think, Moderna is going to go back to 120, and then it's going to look like Upstart, where all of a sudden this thing's trading at $60. So, that's my analysis of Moderna. Now I'm just going to show you quickly what, let me just find this email really quick. Um, so I've been looking at this ETF called the IGV. And the IGV topped out last year at about 440. And then when it broke through, you can see here was the IGV right here. Right there. I don't know what it was trading at that time. But since this thing broke 370, I said my take profit target on IGV is between 260 and 270. And last week it hit 256. Now, why did I pick that number? I didn't just pick that number out of the air. So I've been doing this analysis for many, many weeks. And those of you who've known me in my weekly or sessions, what have you, have seen that I started saying that the IGV was going to go down, pretty much from November. Now, the IGV is a ETF that comprises technology and software stocks like Microsoft, Intuit, Salesforce, all the things that led this market higher, and now are the ones that are responsible for the market collapsing. So, like I said, when I look at a market, I either look for, what is this thing doing? So in this particular period, it was obviously trending higher, and then I'm looking for all the ways to join that trend. But somewhere along the line, I detected that the trend was changing. And again, it was a simple observation of this head and shoulders price pattern. Left shoulder peak is the head, and that's the right shoulder. And then the neckline was a drooping or downsloping neckline. A neckline is simply a line that connects throughout the entire pattern. So that in and of itself was enough for me. This was a substantially very bearish price pattern, which suggested that prices were going to thrown into reverse and we were going to go lower. But it was also dovetailed with another pattern. Let me just kind of get rid of some of this noise and clutter. So there were two bear patterns that were converging at the same time. So when I joined all of the kind of lower end support area, and then I put a line through all of the highs at the resistance, we form what's called an ascending, broadening price pattern, where throughout the pattern, prices are going higher. It starts the pattern narrow and then widens or broadens out at the top. And this is a reversal price pattern. This is actually what gold has been doing for many weeks now. And that's why I've always thought gold was going to go down, despite the fact that inflation's at 40-year highs. So in this state, we have this convergence of both the ascending, broadening, and this head and shoulders. And you can see how the breakout area of both the head and shoulders and the IGV, the support area, was roughly around the 370 price level. Now, I said prices had to go back to the beginning of this ascending broadening thing, which takes us right back to about the 260 area. And you can see that last week we just broke through here. But I don't think it's done. I think we're still going to go lower. But why I showed you this ascending broadening is because I believe that the S&P 500, which is a huge index, is also tracing out this ascending broadening price pattern. And I think it's going to go much lower. That's why I bought all these put options today, because to my mind, the S&P, you've also got a convergence of two bear price patterns. One is this ascending broadening price pattern, and the other is this double top right here. So I listen all day long, people saying, well, where's the bottom? Is the bottom at 4,000, which, we're right at right now? Are we going to 3,800? Well, to my mind, we're going to come right back down to the beginning of this ascending broadening, at least, if not lower. So to my mind, we still got 15% to go, if not lower. And that's how I look at the markets, not what Jerome Powell says, not what inflation is, not what the CPI number comes out with next week. I just look at price patterns and price action to determine risk and reward relationships. Do you guys have any question? Does this make sense to you guys, or is this seeming like Chinese? Over the next 4 days, we'll discuss it. I'll keep, kind of honing in on what I look for. So when I see a pattern, right? So now I start forming a thesis that this thing is going to go lower. So then I'm just going to wait for a day. So this is a weekly chart. So these bars are weekly bars. So you can see right here, you had a key reversal right here. Made a new high, close on the low. And then you had another one here. You made a new high and you close on the low. So those two bars tell me that that's where a lot of the selling is. And you're unlikely on this push to get to see these prices. So that tells me where my levels of risk are. So this is why I caution you, you can't trade reversals in a vacuum. You can't just say, well, this thing made a new low and it closed on the high, so we're going higher. You have to look at it in the context. So this is, I always say the market's like a magician, right? It never shows you or reveals what it wants to do. It's like a magician doesn't just walk on stage and pull the rabbit out of the hat. He's always like kind of distracting you with his right hand while he's pulling the rabbit out with the left hand. And I think like this is a distraction. Makes a new low, close on the high of the week, goes higher today. Everybody thinks, well, it's Goldilocks now, and you want to get long. Now, I thought that there was a possibility that we could retest this breakout area, and I was going to really load up the train if we get to 4,200. And there is a distinct possibility that it could go there. So I loaded up today, and we'll see what happens. But it's just that it closed fairly weak. So you can see this inside, this S&P closed with kind of an inside bar, a reversal. It really wasn't definitive, but I probably should have waited for more. I did go short, and we are going down in the aftermarket. So right now the S&P closed at 400, and we're at 399.66 in the aftermarket. So the market does trade very actively before the market and after the market. Right now, Moderna closed at 136.26, and in the aftermarket, it's trading a little bit lower on the bid. So we'll see where all of this goes. But I did take a heavy bet on shorting the S&P and the Nasdaq right now, because I think that these things are headed lower. So Happy says, how do I put my stops? So basically, once I kind of understand my patterns, understand what this thing is telling me, and maybe the S&P was a little bit more muddled. You had, double top there, you had a double top there, you had a double top there, almost a triple top. So once I see all of these tops and it tells me that this thing is turning lower, then I see what I call my key reversal. And this is a huge day. Made a new high, close on the low. So this tells me, A, where to join the trade and where to put my stop. Now, if you're, see, this one is a little bit more difficult. I just got in on the premise that this thing is, going to go down. This wasn't really a reversal, wasn't really an inside bar. And, it's a little bit crowded. So markets don't go straight up and then straight down. So it's a little bit complex in here, but so just to keep it simple, I look for a certain bar where I can understand where the risk and reward is. So if I get in here, I can understand where my risk is. And now, so at some point you just create risk reward parameters. So we really broke up here. Sometimes you break down and you retest the breakout and then you fail. Looks like today we tried to, and now could fall short. So you could put a sell stop under yesterday's low and a buy stop above here. And sometimes you can construct risk and reward. This isn't probably the best example on how to do that, but I just use, so the market sometimes gets into certain areas where it's a little bit random. So you had a top up here at 4,600. This pattern did its work. It sent prices all the way from 4,600 to 3,800. And now you're kind of in this maybe random bump and grind thing. So what I say is just wait for a bar that then tells you, so let's say by tomorrow, we have something like, looks like this. So what I understand is that the patterns, the double top, the ascending broadening, everything tells me that this thing's going to go lower. So then I just wait for an opportunity where I set up where I can join the trade. So what I would do coming into, the following day is put a sell stop underneath that low and a buy, a stop loss there. So basically that's your risk and, that's your reward. So there are certain times where the market tells you where the risk is. So let's say we look like this tomorrow. What I would say to myself is that, buyers try to push it up here, but by the end of the day, it closed on the low, meaning that the sellers were in control. Now, again, I don't just look at that one bar in a vacuum. To me, this is in context with what is the trend, what are the prevailing patterns that are directing traffic in this particular instrument. And so I'm always looking, what is the governing pattern, and then trying to find price action that gets me in the direction of the trend. So I'm not really doing requests, but DP says, what about Tesla? So I'm going to finish here. I'm not going to keep on analyzing charts. Really, what I'm trying to do is share with you a way of looking at the markets. So I have been very bearish on Tesla. I don't look at the recent, blowout quarter where they did a record number of sales. I don't. So this is the daily chart. Let me go to the weekly chart. And I have been sharing with our members, saying that I think this is going to be a parabolic implosion. So a parabola is when prices just go up very, very quickly. Really what you want to see, in any market is a bottom and then just a slow build and a consolidation and a slow build and whatever. The faster something looks like a hockey stick, usually comes down just as fast. And so I think that you're just going to have a huge unwinding in Tesla. So what I'm looking at, just like Moderna, you have a series of tops. So this looks like a big, bad M top. And basically, we're just coming down now to confirm this top. So once it cracks this neckline at around $700, which we're about $20 away from, to me, that just confirms it. To me, that's just the starting gun. And if you measure the distance from the top, the neckline to the top of this thing, that's about $500. So even if you took 60% of that 500 and took $300 away, that puts you at $400. And I'm guessing we're going to go a lot lower. So I think Tesla is brewing to be a big, bad short. And you can see, just like a lot of these markets, Apple, Microsoft, all of these markets are starting to cave beyond their long-term trend lines. So you had a trend line there, and then you had a kind of a secondary one there, and you've broken through everything now. And now all of these lines that were kind of holding up all of this every time it came back here, it kind of held. And now it's starting to break below this thing. So the pattern of behavior is starting to deviate. And, I think you're just going to get one of these. Sean says, how long for a beginner to get near your level of expertise? Well, let's see. I've been trading for 40 years. So what I'm trying to do is short circuit that process for you. I don't want to sound arrogant, but I wish I had somebody like me helping me avoid all the mistakes that I made along the way. So, what I like to believe is that I can see the opportunities, but I can also see where the market draws you in and creates these traps. And so this is what I try and do with the Pattern Trader, is just share my thoughts. And that's all I'm really trying to do on these sessions. So I'm going to wrap it up here. I'll take a couple more, questions on price action. I'm not going to do any more charts or analysis. What I am trying to do is, so what I look at is what I believe to be patterns, emerging patterns, right? So it really hasn't confirmed yet, but I start getting in way early. I start shorting all the way up here because it was a convergence of both the patterns and the price action. So what I try and do is observe the price within so you started to have a resistance level up here, this 1150 to 1200. And then I looked at also the price action. So every time you kind of got to this area, made a new high, close on the low, 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 made a new high, close on the low. So it was really these guys that started to tell me that every time this thing goes higher, there's a huge amount of selling that comes in. So as these things are going higher, the insiders are selling into it. And this is a weekly chart. So by the end of each one of these weeks, the market's made a new high, but by the end of the week, it's closed on the low of the week. So though that price action started to tell me that this is what I call a distribution. People are getting out. This whole thing is a distribution. You have accumulation where you have a double bottom and then it goes higher. And this is accumulation. This is distribution. People are getting the puck out and leaving retailers with the fantasy of this thing, selling more vehicles and China sales and what have you. And that's the thing. People buy into stories, and price is the real story. Price is the news. Price tells you. So this was, this company went to almost record prices based on a great quarter. They blew it out in terms of sales. All these projections are blowouts, and price has done nothing but go lower since then. So that's why you can't buy the news. By the time the news comes out, it's over. It's like buy on rumor and then sell on fact. John, you're welcome. John is on every one of my webinars. So John, you're a trooper, man. Thanks for checking in. Thanks, Eduardo. I appreciate it. So over the next couple of days, we'll keep on going through the markets, and right, wrong, or indifferent. Tomorrow might be wrong on Moderna. Tomorrow the market could go higher. It really is irrespective, right? So all I'm looking for is probing the market, looking for opportunities where I can take a piece out of the market, where I can take a chunk of the middle of a big move. And they don't happen every day. They don't happen every week. But as you can see from my prior scores, I'm just looking for these setups that come along and put you in a great position. And, you know, it's not every day, it's not every week. We may not see it this week, but again, it's just a thesis and a way of looking at the markets. And especially now where you have so many countervailing themes. So I listen to this business program just because I'm bored, you know, all day long. I have it on, and every 5 minutes they have somebody else sharing what they think of why thinks something's going to do something, and this guy saying recession and this guy saying something else. And if you listen to this, you know, all you're going to do is be confused. And so, you know, the markets are the story. I always say that the market is always right. You know, the market is always right. Thanks, Ben. Anytime you're ready, no worries. So Deborah says it was awesome. All right, thanks, guys. So tomorrow, 4:30 Eastern Standard Time. I'll talk a little bit about risk management tomorrow. So thanks for checking in, and have a great, healthy and prosperous day. I think we are going to get a down day tomorrow. So, you know, I'm just looking for my opportunities accordingly. Thanks, everyone. Thanks, Dwight.